Good morning, Mark Soderberg with ADM Investors with a quick summary of today's USDA report. A few surprises here, particularly as it relates to the feed grains. I'll start off in the wheat. U.S. wheat ending stocks, they were increased 25 million bushels to 846 million. That was about 15 to 20 above expectations. That was a result of 10 million bushels higher imports, while U.S. exports were cut 15 million bushels. And there were some pretty significant changes by class as well. Hard red winter wheat stocks, they were kicked up 26 million bushels, up 16 million on the spring wheat, while Durham stocks were cut 13 million bushels. Wheat prices right now on the defensive, roughly 4 to 8 lower, let's call it, led by declines in Kansas City because of the higher stocks figure there. Globally, not much change. Global ending stocks were revised up to 260.7 million metric tons. That was largely in line with expectations. In corn, ending stocks they were cut 75 million bushels. That was about 40 to 50 million below expectations. We were looking for a 25 million bushel cut. The cut to stocks came as a result of exports being revised up 100 million bushels, while feed usage was cut 75. Corn did shoot out to gains of 6-7 cents. They have backed off a little bit now, trading 3 to 4 better in old crop, new crop lagging a little bit, up about a penny and a half. Globally, there was no changes to production estimates in South America. World ending stocks, they were cut just over 1 million metric tons to 287.7, slightly below expectations. On the beans, really not much changes there. Ending stocks were cut 5 million to 375, in line with expectations. We saw a 5 million bushel increase in imports that was more than offset by a 10 million bushel increase in the crush. We did see some changes as expected in the in soybean oil usage for biofuel production. That was cut 200 million pounds, while exports, they were revised up 500 million, given a strong pace to export demand there. Production was increased 120 million pounds as a result of the higher crush, while other domestic usage also cut 100 million as a result. Oil stocks, they were cut 80 million pounds to 1.451 billion. Change right now in price, we're looking about 5 to 7 higher on the beans, while in products, a little bit lower here in the bean oil. While meal is up just over $1 per ton. There are no changes in the South American production. Global stocks, they were revised up about 1 million metric tons, largely due to much bigger supplies carried in from last year. That was largely offset by higher crush numbers now we're seeing out of South America. So everything taken it. Market seems to be taking today's numbers pretty much in stride, as we kind of expect the tariffs will continue to dominate the headlines and likely have the most impact on trade, keeping volatility on a high as well. So now focus on those tariffs, and U.S. weather takes on greater importance. Thanks for listening, everyone. Hope you have a great day.